Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, Phil Tarrant here, editor of Smart Property Investment. Thanks for tuning in to the Smart Property Investment Show. It's always a pleasure to have you with us. Today, our guest, Katie Simpson, who, like all of our other guests on the show, I typically know absolutely nothing about. So Katie's come into the studio today to have a chat to us about her journey investing in property. And in the brief 1 minute sort of pre-on-air chat that we had, I've worked out that she's got another properties and another one on the way. And that's pretty much the extent of everything I know about Katie. So how you going, Katie?
Good, thank you.
So one of the reasons why, Katie, we keep the show so unscripted is, number one, because I'm sometimes disorganised and I don't put everything together, so I know everything about someone. But I quite like the idea of meeting someone straight off the bat, face to face, sort of live on air, because it's just the conversation we have is the conversation our listeners have. So you mentioned beforehand that you listen to the show, so thank you for being one of our loyal listeners. Since we've been going for Adam, our producer here, is nodding his head. We've been about a year or so now in the game, so we're gonna have to celebrate number 52, I think, as well at some point. He's nodding his head. But Katie, so you listen to the show?
Yes, I do, regularly.
Why do you listen to the show?
I started listening because I used to subscribe to the magazine, and then when I found that it was becoming all digital, I got a subscription to the digital version, and then I just came across the podcast when it was mentioned in the magazine, and I just thought, oh yeah, why not? You know, everyone's got different ideas and viewpoints and stories, so why not get involved as well and listen to them?
And when do you typically listen to the podcast?
I listen a couple of times each week.
Okay.
So I just go through and see if there's any new ones that have been put online.
Mm. And do you typically listen to it when you're doing something else?
I listen to it on the train,
okay, on
the bus. Because I don't have a long commute to work, sometimes I have to stop it halfway through when it gets to a good place, and then I think, oh, I've got to go back and listen to it on the way home to finish it.
It's good. The reason why I ask is that more and more often we're seeing is that listening to podcasts, it's like, and I do it myself, I always listen to a podcast on the way to work, and I don't actually think too much about it, but it's sort of like learning through osmosis. You just get information, you don't really realise that you're receiving this information. It helps sort of shape the way you think about stuff. So hence the reason why I was questioning you on that. But so let's talk about property. How long have you been investing for?
I started investing in 2001.
Okay.
So about 15 years.
Okay. So you've been at it for a little while?
Yeah.
And what's your portfolio look like today?
Well, we've got 5 properties at the moment, and we're currently going through the settlement of a 6th property.
And when do you settle?
We're looking at about the 21st, I think, so the next week or two.
Next week or so. And do you still get the same excitement and buzz around settling on a property?
No, not really. Not like the first one. Nothing beats the first purchase. And then I think the second, because there was quite a long time between the second as well, that was another time when I got the high from buying.
Yeah.
But now it's just like another notch on the belt, I think, for me.
And do you think that's part of it's process orientated, so it's not a new thing, which is a good thing, but do you think it's more so a confidence type of, like all those what ifs questions that you probably had when you first purchased, you don't have them anymore when you're buying?
No, I don't.
No.
I don't have the same reluctance that I had when I first started buying, and the more I buy, the more confident I get and reassured that I know what I'm doing.
And do you invest by yourself or in conjunction with someone else?
Originally, when I bought my first property, I bought it by myself, and the second one and the rest have been with my partner.
Okay, so you co-invest together in all the properties that you buy?
Yeah, we do now.
And have you got the same... It's interesting when people, whether it's a husband and wife or a partner or it's a business partnership, there's typically one person who is more gung-ho than the other in one of these, in all relationships really. Is the same thing in the way
Definitely.
You guys are?
Yeah, it's me.
It's you?
Yeah, I do everything. I do all the research, all the running around, calling people, getting the team together to let them know that we've got a property in mind. So it's all me, because I'm the driver, because I was the one that started investing when I was young, and I started earlier than my partner did. So I'm always the one that initiates it, definitely. And when I think we've sat around for a bit too long and we haven't done anything.
Are you the agitator?
Definitely.
Yeah.
I always need a project, and if there's nothing going on in my life, and especially if work's boring, I need something. So it's always in property that I tend to chase that project or in finance.
And is your partner obviously supportive of it? Are they just like, go and do it if you know they champion, or do they challenge you along the way?
There's been times when I've been challenged, but I've always tended to win.
Okay.
There was one time when I didn't win.
Okay.
And I was a bit upset because it was a really good deal too, but he put the brakes on and said, no, we've borrowed too much money, and he wanted to pay off our principal place of residence.
Okay. So that's a bit of a strategy thing, really.
Yeah. He wanted to pay off our main mortgage rather than...
Which is nothing wrong with doing that, by the way.
No, there's not. I mean, the traditionalist and our parents would say that it's better to pay off our main property that we live in and not to go and buy investments.
And why are you investing in property? What's the goal?
To be financially secure at a young age, I guess, would be the main driver. And I find it easier than buying a business and running a business. So it's comforting for the rest of our life that we can retire early, or if something happens that we can manage ourselves and our money.
You mentioned that, rather than a business in many ways, and I view it as having a property portfolio is like running a business. It requires the same amount of massaging and work and emphasis. And property is quite an interesting one, because if you don't do anything with it for a little while, you're okay if you're buying the right stuff. Whereas a business, you typically need to be constantly grinding it. But for a lot of people I see, and what sort of work do you do?
I work in human resources.
Okay, so you just got a professional career, sort of you're a PAYG, you get a pay slip every day, or every week or month or whatever it is. I find that a lot of people in that sort of particular situational circumstances that invest in property get a lot of buzz out of the property part of it, because they actually feel empowered to make decisions and be their own boss. And this analogy of a property investment portfolio is like running a business. For a lot of people, it's a way in which they can be the master of their own domain and make their own decisions and make the call on things and make mistakes, and hopefully not bad ones. But do you sort of get the same feel out of that, the same sort of controlling?
Yeah, I do. Yeah. It's that whole looking for a new project type mentality, and knowing that you're on top of it and initiating different things that you can do to make it better, or to find something new in the world. That you can...
So 5 properties. You're just about to settle on the 6th one. Well, once that 6th one happens, what's your portfolio look like? What's sort of the total value of the portfolio?
It's about 3, I think.
Okay, so 3 point something million.
Yeah, 3.06, I think it was.
Okay, so it's a nice portfolio. And what sort of debt would you have on that?
About 1.2.
Okay.
And out of that 3.2, we've got 2 in self-managed super. So yeah.
So there's quite a lot of equity
Yeah.
in your portfolio already, which is pretty cool. You know, being able
Actually,
to.
it's probably more like 1.5.
1.5.
Yeah.
Okay, so it's a couple of million bucks, Nelly, in equity, which is a great resource to have in terms of drawing equity out of it to keep purchasing property, or just letting it sit there and do what it needs to do. And at a point in time, you can start paying it down the debt, or you can sell a couple and be completely unencumbered. What's the sort of long-term goal for you guys? Is it to go from the 6th property to 7th, 8th, 9th, 10th? Is there a portfolio size or a equity position that you hope to be in at a particular point in time?
We don't actually have a goal of how many properties we want to buy. We would like to buy a few more next year, but we just want to have a passive income in the next 5 to 10 years that will allow us to possibly retire a bit earlier than what we normally would have. And
that sort of equity level, I imagine your portfolio is pretty good cash flow then.
Yeah. It is. Yeah.
So it's putting money in your back pocket every year.
I think we're probably about break even with the just break even with the ones that are out of the self-managed super, the 3 that are outside of self-managed super. 2 of them are investments and 1 is our principal place of residence.
Okay.
Yeah.
And is most of the equity sitting in your principal place of residence?
Yeah. Definitely.
Okay. Is that completely paid off now?
No, it's not.
And if it had it your way, would you look to draw down more equity out of it to buy some more stuff?
That's where we're getting the money for the next lot of properties,
Yeah.
including the one that we're currently settling on.
And you mentioned beforehand that when you sort of get your teeth into something and say, okay, let's do it again, let's buy another property. You said you're the person that puts your team together. Who is that? Who do you sort of refer to as your team?
Before this purchase, it was basically just the financial advisor.
Okay.
The mortgage broker and the solicitor.
Okay.
And now for the property that we're currently buying, we've hired a buyer's agent.
Okay.
And so it's now getting them to talk to our the solicitor, the mortgage broker, and the accountant sometimes as well.
And how did you go? Well, two questions. Why did you start using a buyer's agent for, and then how did you find that buyer's agent?
The main reason we used a buyer's agent for this one was because the purchase is our first interstate. It's in Queensland, in Brisbane.
Okay.
And we don't know the area at all. So listening to the show has given us more advice as to where to look in Brisbane. I know that the magazine has purchased a couple one in Woodridge, and I think the other is
Springfield.
Yeah.
Okay, yeah.
So I've been watching those and reading a lot more online, and so that the main reason was so that we don't have to go up there and look at the property, because sometimes we don't have a lot of time to go and see them. So that would allow them to be able to find the property that meets all the criteria that we have, and to narrow it down to the best areas. And some of them have potential. The one that we're going through at the moment has a big land size and has the ability to have a granny flat put on the back.
Okay, so it's got potential for upsides.
Yeah. So that's the sort of thing that we wouldn't normally look at. And the other side is, being in Sydney, we always look for something that's close to a station, whereas in Queensland, Brisbane, you don't sort of tend to look for those ones that are really close to transport or, that sort of thing. And
was it a bridge too far? Obviously it wasn't, but was it part of the process that you actually need to pay a fee to a buyer's agent to actually go and source a property for you, and when that money could have been used to probably pay for a big chunk of the stamp duty? Yeah, so that originally we didn't go with a buyer's agent as well for our previous purchases, because there was a fee involved, and we knew it would be probably at least $10,000, but now we're at the point where we can afford that, and it to me it's like it's saving me time and stress, so I'd rather pay that money and get someone else to do it for us. And your previous question about how we found the buyer's agent, I listened to the show, so they mentioned Right Property Group. Okay, and using those guys, are you? Yeah, so we went and had a few appointments with some of the buyer's agents that we'd heard of through the show, and we just chose Right Property Group. Oh, they're a good outfit. Yeah, they're very good. Interesting. So the property that you've sourced is on a large block with potential for upside, putting a granny flat on. Sort of going back to your point around the fee that you pay. So for you, paying that fee reduces a lot of the stress, the time component of it. Were they the main drivers for you for using a buyer's agent? Do you think that the property that you're buying, do you think you would have got the same deal as what your buyer's agent would have got on that property, or do you think you might not have even found the property? Well, one of the other reasons we went through a buyer's agent is because some of them get off-market properties that don't go online to domainrealestate.com, and they've got the knowledge, they've got the contacts within the industry, makes it easier. So would I have found that property if I was looking online? Maybe, because it was actually advertised in Domain, whereas other properties that they might put forward in the future may not be. Yeah. So this one, and I was looking at when I was doing my original searches, I was looking for a different subset of properties. I was trying to keep it a bit lower so that we could buy more. So the purchase price was, for maybe a 250K property that could have been a townhouse or a unit, more a townhouse or a house. But I wasn't looking at the size of the land, because I wasn't looking at
the laws for like putting a granny flat on the back. And apparently they're quite relaxed in Queensland as opposed to other states. So, but now going into the future that I've got that in my head, I will be looking at different properties with those sorts of features moving forward.
So this property that you're settling on in a couple of weeks' time or a week's time, what's the purchase price of it?
$315.
315.
Yeah.
Okay, and do you feel as though you've got it at market or under market value?
I think we've probably got it at market.
At market value.
Yeah.
So what sort of yield are you expecting to get from that property to start
There's
with?
tenants in there paying about $310 a week.
Okay.
And they're on a lease till March.
Okay, that's good. So the yield's not too bad on that. Was the primary goal of this particular property that you purchased, is it a capital growth play? Because your yield's not bad, and your portfolio yield, I imagine, is not bad at all if it's around neutral. So is this a longer term hold for you guys over time, and even if you don't do a granny flat, that you're expecting capital growth in the future? This
is a long term capital growth project.
Yeah. Okay. Yeah. That's good. I imagine when you sat down with your accountant, they've done your financials. I know our accountant, my accountant, will say, well, you need to find some better yielding properties to help underwrite some of the portfolio expenses. Or he might say, look, cash flow's pretty good, yield's pretty good. You could probably go after more of a capital growth play. Now, everything we try and find, we like to have really good capital growth prospects and also really good yielding or cash flow, but you can't always have both of them. We try and find both of them, but at different points, and this is an important, I guess, message for our listeners, is that at different points in your portfolio, you're going to need different types of property that best suit your needs. And a capital growth property play, your LVR and your portfolio is pretty low as well. So go out and grab those. In terms of your experience with a buyer's agent so far, would have you done anything differently in terms of selecting them and using them? No, that's pretty good. Would have you, if you go back in time 10 years, would have you told yourself perhaps you should have started using a buyer's agent earlier, or are you quite sort of happy with how it's worked out?
I wouldn't have used a buyer's agent in my first few properties because I started buying in 2000s when buyer's agents weren't really heard of.
Yeah.
I think I would have used one when we bought our principal place of residence about 3.5 years ago.
Okay.
It drove us mad going around every weekend looking for something because it was for us to live in. So I think we were thinking about using one back then, but again, the fee was the main driver that stopped us from doing it, even though we didn't realise at the time how hard, and as the weeks got on, how hard it was, how many people we were trying to beat, but then the extra $10,000 or whatever you pay as a buyer's agent fee, long term, all that time that goes into trying to find somewhere, you just think I should have just bit the bullet and got it done.
I hear that a lot. It's the benefit of buyer's agent is hopefully they put you into a property which is going to meet your investing goals, and that might be as we discussed, a capital growth play or a cash flow play, or both, hopefully. But for me, I use buyer's agent, and the reason why is that I want my weekends to be my weekends with my family. I don't want to be tracing around looking at properties. A buyer's agent can do that job a lot more effectively than I can, and I'm happy to spend the money to do that to free up my weekends. But that's not the only reason. I think for buyers, if I was doing it myself, I probably just wouldn't do it. So if you use a buyer's agent, you might get in a property earlier. And therefore, if you wait 10 months to find the ideal property, that's 10 months that you're not in the market. And if you buy in a good market, your $10,000 can potentially, if that's the price you're paying, can potentially pale into significance in terms of the growth that you can get by having money in the market growing at a particular rate. So it's just an important message for our listeners. How do you go with managing your properties? Are you pro managing agents or anti-managing agents?
We have a real estate look after all of our separate real estates, looking after all of our properties.
Okay. And do you manage the managers? So are you the person dealing with them and they go, your hot water's broken, you say, okay, go and get some quotes and fix it?
Directly, yeah. I do. I'm quite proactive with that. If they call me and say there's something wrong, I always pretty much give them permission to fix it straight away. So even if it's not an emergency, like we had one of our tenants requested some air conditioning because it was really hot over summer out west, and so I looked up how, asked how much they were and just said, yeah, just put it in.
Just do it.
Yeah, because $2,500 to $3,000 now, even though they weren't prepared to pay extra rent, I could claim it back on my tax.
Yeah.
And it just added to not the value, but the likelihood that we could get another tenant in there
if
later
your tenant
on.
moves on, it's going to be one of those
Selling
nice to
points.
have
Yes.
that might influence them to tenant. And do you have a problem with sort of tenant vacancies, or you typically got people in your places?
No, we've been very lucky because we're in areas where there's a very low vacancy rate.
Okay.
So we haven't, every time we've had our turnover for tenants isn't high either. I think I've had probably in one of the properties that I've had for the first property I bought for 15 years, I've had probably 4 different tenants over that time.
That's
which
pretty
is
good. So your property, so you're up in, you mentioned sort of Loganshire way. Where else are your properties based?
I've got one in Granville, very
Okay.
close to Parramatta CBD.
When did you buy in Granville?
That was 2001.
I reckon you've done very well out of that.
Oh, yeah.
Yeah.
Really good. Even though it's in Granville, so some people are a bit shy, like, well, got this stigma attached to Granville because it's not Parramatta on the deed. So it's, they get a bit funny, even though it's just walking distance. It's about a 10-minute walk.
Okay. So what did you buy the Granville one for in 2001?
2001, yeah. I bought it for $189,950.
Okay. What's it worth now?
Yeah. Probably about $430. And that could be underestimating slightly. It just depends on the market.
Okay. And so from Granville, where did you go after
Marylands.
that? Okay.
Still very
Also
close
good.
to that area.
Yep.
Yeah.
And after Marylands?
That was my partner had an apartment at Bondi, so we started transferring our properties together, and I borrowed a portion of that property Bondi, so that was Bondi Beach, and then we bought in Cremorne.
Okay.
So we still had the 3 properties, investments. So we bought Cremorne as our principal place of residence, and then after we bought in Cremorne, we sold Bondi.
Okay.
And so we got some capital from that to put into our main mortgage. Then we bought in Mount Druitt. So after reading your story about purchasing a unit in Mount Druitt,
How'd you go in Mount Druitt?
wonderful, really
it's pretty
good.
good.
Yeah.
Okay.
It's probably I think it's on the same street. We're on Luxford Road across from Westfield. We could be in the same block.
Maybe.
Yeah. I don't
Maybe.
know.
We're one. They're all the same,
Yeah,
those ones.
they
but
do. Look
Yeah,
the
we
same.
bought out there for $179,000 or something
I
like
know,
that
I saw
for a
that.
2-bedroom and
Even the price that I paid was ridiculous, and I still think, why couldn't I have bought for that price that you bought for?
Why couldn't I have bought more when I
Yeah,
could have?
yeah.
It's a perpetual problem.
That's it.
So after Mount Druitt,
We actually bought in Mount Druitt again, but this
Okay.
was a different one. It was an off the plan. It was our first off the plan, so that was another thing that we had to go through. So
how
we didn't.
did
we
that
didn't
go?
know.
You meant off the plan?
It ended up being really. I shouldn't say easy, but it was.
Okay.
Yeah. It went fine because even though it was off the plan, we didn't buy it sight unseen because the owner had bought a few other properties in the block, and then he held them for a while, and then he started selling them because he wanted the money for another development.
Okay.
So we bought when the building was nearly finished. So
Okay.
we still got to see how
Pretty much finished.
Yeah. How
So
all
nearly
the
even a
walls were.
secondary sort of sale on an off-plan
Yeah.
purchase. Okay. Well, you've bought in really good places. And now you're up in Brizzy.
Yeah, hopefully. Well,
Yeah.
we've got to we haven't got the building and pest report back yet.
Okay.
That's up. We're waiting for the buyer's agent to come back with that, and finance as well, but that should be okay.
So would you say that you've been a good investor?
I would say I've been a good, I'm set myself high expectations. I'd say reasonably good. Even though I've got quite a good portfolio, I think I could have done better.
Okay. And in what way?
Bought more. I wouldn't say I've done badly in terms of what I've bought and what they're worth now and the growth in them, but I think I could have bought more along the way. And I wanted to, but my partner was a bit hesitant and restrictive about what he wanted us to purchase.
The thing is that every successful or smart property investor I've ever spoken to, when you ask them what they could have done better, you're not alone everyone says, I wish I bought more then because I could have. And I think a lot of people are held back by fear, confidence, perhaps prejudices about particular areas or types of properties. And I'm the same. I wish I bought more when I was buying. I could have easily bought more properties, but I don't know, I've got 1,000 excuses why I didn't do it. A lot of them are good reasons why as well. But if I really wanted to, I could have. And I think it's not a bad mistake to make, the fact that you didn't buy more. It's sort of more of a missed opportunity than anything else. But the portfolio that you've created here, you've bought in areas like Granville and Maryland's early 2000s, and they were up. So I wish I bought properties there then, because they're in demand areas. They're very close to the Parramatta CBD, which is going through a massive ongoing development. You've got a lot of big businesses moving out there now, and people need somewhere to live. So a lot of people are sick of the commute. So I think you'll continue to do well there. You've got some good diversification with having a place in Bondi Beach. You can't go too wrong there. Might not be going up in value as fast as perhaps some of your other properties, but and then Cremorne as well. So you've certainly got all your bases covered in terms of Western Sydney sort of, and then also places close to the CBD, but some diversification up in Brisbane as well. So yeah, it's good. What would be your sort of if you could speak to any new investor who is thinking about investing in property, what would you tell them?
Do your research and don't listen to everyone that tells you not to do it. Also to go and buy, even if you don't want to live in Mount Druitt, still go and buy there, because no one wanted to live in Parramatta or Granville when I was living there and buying there. So, and now it's seen as, a really big city, like Sydney's second CBD.
Well, it's bigger than Adelaide, Parramatta, and it is a big city. It's the capital of the western suburbs at least, and 1 in 5 Australians live in the western suburbs of Sydney. So
don't listen to the
naysayers. And this is what I was saying, the potential, all the reasons why you shouldn't be investing. One of them is just prejudices about a particular area, and most of the time that's generated from your own experience. You might not even think about these areas. Investing up in sort of Logan Shire right now, it's not that dissimilar from the western suburbs of Sydney. It's very similar. Well, western suburbs sort of 5-6 years ago, very similar price points, very similar dynamics, very similar type of housing, very similar type of yield potential. That's the reason why we invest up there now, because it shows all those dynamics which would indicate areas of Brisbane that would indicate ongoing growth over time. So it's good to see you up in that market as well. We're going to have to wrap up, I think. We're running out of time. Adam's nodding his head. All very good. Thanks, Katie.
Thank you.
Enjoyed it. Best of luck with this most recent purchase. You'll have to send us an email and let us know how you're getting on. I'm sure our listeners would like to know. And if anyone's got any questions for Katie or myself, you can email me, editor@smartpropertyinvestment.com.au. Is that the email you emailed us on? Would have been?
Yeah.
Probably? Yeah. Good.
Yeah.
Remember to check out smartpropertyinvestment.com.au. We're on all the social stuff, Facebook, Twitter. You can follow me on Twitter @PhilipTarrant if you like. I typically sort of tweet what's going on. Thanks for tuning in. We'll see you next week. Bye-bye.